Good morning, everyone. Thank you so much for joining today's webinar titled ESG in the Ghanaian banking sector. Before we begin, I would want us to take note of a few housekeeping rules. We would like to mention that this webinar is being recorded and will be posted on our YouTube page. Kindly, all participants have been muted. During the question and answer session, you can raise your hands and be unmuted to speak. You can as well drop all your comments and questions in the Q&A chat box on your screen. The survey link will be put in the chat box for you to provide us with your feedback getting to the end of the webinar. To make the session more interactive, we have created polls for your feedback on ESG issues. Now, without wasting much time, I would want to introduce us to the assurance partner, Mr. Kwabena Situ, to give us an introduction to the webinar. Thank you.
Kwabena is an assurance partner and head of Deloitte Ghana's Sustainability ESG services. He is also the head of Deloitte Academy and a deputy leader for our financial services industry. He has more than 15 years post-qualification experience in all aspects of auditing, accountancy, and consultancy services. He has acquired immense experience in international financial reporting standards, implementation, and updates, an area he has and is still championing in West Africa. Kwabena has worked on various assignments for clients in the banking, insurance, and oil and gas sectors. He is also a key member of the Deloitte Africa Accounting and IFRS Specialist Group. Kwabena is a fellow of the Association of Chartered Certified Accountants UK and a member of the Institute of Chartered Accountants Ghana.
Good morning, everyone, and welcome to the second webinar we are having on sustainability and ESG. But I think this time around is a bit different because the focus is on the banking sector. So we are zooming into the banking sector. Why? Because globally we've seen that the absorption rate of sustainability is increasing due to demand by investors, regulators. So we thought it wise that we need to still continue to educate the public and see what can come up from these things we are doing. But what is driving this webinar? What is driving this webinar? Number one is the demand by regulators. Demand by regulators. And also, as a result of our experience with working with some of the Ghanaian banks, we realize that this webinar is very critical to the work we do. And there are certain critical issues as we are engaging with the industry. Certain critical issues are coming up. Number one is that we've seen that there is a lot of policy-related issues when it comes to ESG. Number two, we are also have to deal with climate risks. So we've seen a lot of conversations within the sector around climate risks. And also, we've also seen that banks are now finding innovative ways in bringing out new products to cater for their sustainability clients. So now the customers are demanding products where they want to see a bit of sustainability or ESG around the new products that is coming out. So in this regard, what we are saying to banks is that the demand is changing. Things are changing within the environment. So you have to actually work with some of these experts that knows what to do when it comes to sustainability, and they can advise you rightly, because the journey of sustainability cannot be achieved without certain collaboration. So in this webinar, as much as possible, as we share the various thoughts, as we share the various insights, if you need to collaborate, please reach out to us and we are willing to help. I would like to give you a quote from the NetBank chairman, and he said something very interesting when it comes to sustainability. He said, our planet and its people are facing unprecedented risks and vulnerabilities. And the only suitable response is a systematic one that balances the need for decisive change with an absolute commitment to achieving the UN sustainability goals to ensure greater prosperity, social justice, and equality for all. At NetBank, our strategies, actions, and product offerings are increasingly guided and informed by this imperative. So this is a very important statement that the chair of the NetBank made. And as we start this webinar and we engage with you, surely there will be certain questions that will come up that we might not have the immediate answer, but please do well to still share and we will definitely get back to you. So we would like you to contribute actively to this webinar, engage us, get the insight you need from us, and we have a pool of panelists, experts that have deep insight into the topic we are about to discuss. So, ladies and gentlemen, I'll leave you now with our head of financial services industry in the name of Charlotte Folsey. She'll give us a few words and then I'll come back to you and then we'll pick it from there. Thank you and enjoy this webinar. Thank you very much.
Thank you, Kwabena, and good morning again to everyone. So my task is quite simple this morning. What is the Ghana perspective when it comes to sustainability and environmental issues? So let me kick off by saying that in 2015, the Bank of Ghana formed a committee to develop the sustainable banking principles to guide the banking sector. Now, these principles are aimed at recognizing the role of banks in achieving the UN Sustainable Development Goals. So fast forward to 2019, November, the Bank of Ghana published the Sustainable Banking Principles and Sector Guidance Notes. Now, the principles shift the focus of the banking sector from promoting just economic growth to addressing environmental, social, and governance matters. Now, what are the priorities of the banking sector? These priorities are now aligned with addressing challenges related to climate change, related to pollution, waste, and facilitating the transition towards a climate resilient and resource efficient economy. Now, banks are putting forward, they are putting their funds towards endeavors that aim to achieve the SDGs or the Sustainable Development Goals. Now, they are also expected to transition. So we see that the banks are transitioning to greener sources of energy, such as solar energy, which can actually increase the share of renewable energy in the global energy mix, while they are also making significant long-term savings financially. They need to create an environment that promotes gender equity and ensures competent women have actually worked to see women who are competent sitting at the table where decisions are made, where policies are formed. These have reaped benefits to the sector. And in the same way, focusing on these sustainable development goals, we believe that the banking sector will also now go on to promote things that are climate friendly and not to destroy our environment. Sustainability considerations have become a key element in the operations of the financial sector. And Bank of Ghana, being the regulator, is insisting that Bank of Ghana must continue to demonstrate its commitment to the SDGs by creating the right atmosphere for full compliance by the banks. Being a regulator, we know that when the Bank of Ghana says A, all the banks will follow. What is the long-term commitment that we are looking at? The journey toward transitioning to a sustainable economy is actually a long-term one, and it has its own challenges, even though we also see a number of good opportunities in there. There is really no trade-off between sustainability and profitability. The sector can become environmentally, socially, and financially sustainable at the same time. What we are saying is that this is doable. It is not something that is just in our mind, but it's a call to action. So what is our call to action? sustainability or ESG is here with us. It has come to stay. And we must all take on the task of championing this cause and ensuring that its usefulness is fully optimized by all. Thank you very much, Kobna. I hand over back to you.
All right, thank you very much, Charlotte. And then you could clearly see that the journey started way back and we are moving with that journey. So quickly, we are going to show you some questions we would like you to respond to. It takes a few minutes or few seconds to respond to that question. And then we come back and look at the results. So probably takes a few seconds to respond to that question. Okay, so it's up now. Have you embedded sustainability and climate goals into the strategy of your organization? So just select one for us. So deeply embedded, recently embedded, in discussion but not embedded yet, is now being considered uncertain or non-applicable. So try and respond to this polling question for us. Okay, so I think we have more than 50% that has responded to the questions. Thank you very much for your response. Okay. Right. So I think we still need some more responses. So we are almost at 60%. And if we are able to get to 70 or 80%, I think it should be a fair representative. Okay, we are almost there, almost there, almost there. Okay. All right. So I think at least we have more than 50%. That should be fine. So thank you very much. So the poll can end now. Thank you very, very much. So we move to the keynote speaker. Then I'll come back and debrief the result of the poll. So we move to the keynote speaker. Unfortunately, Johnny Wa can't join us, so we will hand over to his delegate, Dr. Ebenezer Ashley. So let's hear the profile.
Dr. Ebenezer M. Ashley, Executive Head, Research, Media, Business, Intelligence, and Market Conduct of the Ghana Association of Banks.
Good morning, everyone.
A second, please.
Okay.
So I would like to introduce us to the keynote speaker. Dr. Ashley is the Executive Head, Research, Media, Business Intelligence of the Ghana Association of Banks.
Oh, the normal speaker.
Head Consultant and Chief Executive Officer of ABN Consultancy, member of panel of examiners for doctoral and master's programs at the University of South Africa in South Africa, and head of training and development at ICAG. He was a senior lecturer and dean of the School of Business and Leadership at Regent University College of Science and Technology in Accra. From July 2014 to September 2016. He's a regular contributor to socio-economic discussions on radio, newspapers, and television stations, both national and private in Ghana and abroad. Dr. Ebenezer Mensah Ashley completed his philosophy degree program in applied management and decision sciences with concentration in finance at Walden University in Minnesota, United States. Thank you.
Dr. Ashley, we are ready to take your address.
Thank you very much. Good morning to everyone. Hello.
Hi,
Hello,
Doc.
we can hear you, Doctor.
Yeah.
Okay. Yes, I was thinking there may be more reading, and so I was on standby, but realized I could take over. I would crave indulgence to share a screen with everyone and then take up the presentation from there. Okay. All right. And so once again, good morning to you all. And I am stepping in for Mr. John Dewar, the CEO of the Ghana Association of Banks. Today's presentation would focus on the sustainability, ESG, in the banking sector within the Ghanaian economy. As in the two preceding speakers emphasize on one common goal, that is the need for ESG to form an integral part of all organizations, all industries, and should be found in every facet of the various sectors that come together to form the Ghanaian economy. Indeed, the banking sector is no exception. There have been significant inroads with regards to its adoption and implementation. And from today's presentation, I'm sure we'll be able to attest to some of this progress that has been made. The presentation would be looked at from this particular angle. There will be an introduction to the concept. We'll look at the principles and ESG, new paradigm in banking practices that actually has been ushered by ESG and sustainability. Contribution of banks to the realization of this common goal. We'll look at the role of major stakeholders in this particular context. And then the concluding statement would also be presented. We begin by looking at the concept of sustainability. Actually, what is it? We say that the bank's ability to meet present needs of contemporary consumers without compromising the needs of future generations is aptly described as sustainability. Now, the Bank of Ghana in 2019 described sustainability as strategic preservation of the environment, climate, and natural resources for future generations, while guaranteeing human rights and dignified life, devoid of want and poverty for all. In essence, the concept of sustainability banking relates to how banks could mobilize resources and strategically position themselves to ensure realization of the aforementioned objectives. As of September 2019, universal banks in Ghana were reported to hold total assets valued at 115.2 billion Ghana cedis. This statistic reflects the valuable contribution of banks to allocation of financial resources for business environment, business investments, and infrastructure development throughout the country. Quite significantly and consistent with other developing economies, Ghanaian banks assume crucial role in project financing across the country. The foregoing positive attributes notwithstanding, some experts consistently argued many projects funded by banks in prior years tended to impact negatively on social standards and quality of our environment. And so in prior years, the emphasis has been on profit maximization to the neglect or the eventual effect of this investment on the environment. but the banks have revisited this investment strategy and have now adapted the new paradigm. Now, the principles that the two earlier speakers touched on, let's look briefly into it in a deeper context. During November 2015, the governor of the Bank of Ghana inaugurated the Committee on Sustainable Banking Principles. The inauguration marked the beginning of consistent development of works on sustainable banking concepts, commonly called the Ghana Sustainable Banking Principles, or simply the principles. The Sustainable Banking Principles Committee that the female speaker mentioned has developed 5 sector-specific guidance notes and 7 principles to facilitate alignment of banks' businesses to the new paradigm. The various sectors to which these principles apply include oil and gas and mining, power and energy, manufacturing, agriculture and forestry, and also construction and real estate. My brothers and sisters within the accounting fraternity will be familiar with most of these sectors, especially when it comes to the preparation of books for the various organizations. The foregoing is named among the sectors that constitute significant proportion of portfolio exposure in banks, and most critically sensitive to environmental standards. Invariably, the activities and operations of this.
Hello, Doc.
Yeah, hi.
Can you speak up a bit? I think we are struggling to hear you. So if you could speak up a bit. Yes, thank you very much.
Is it better now? Is it okay? Hello? 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 Hello?
Oh, it's better. It's better.
Is it better now?
Yes, please.
Oh, okay. Thank you, Robert. And so the principles facilitate banks' responsiveness to emerging megatrend issues across the globe. Notable among these issues in recent periods include financial and economic impact of COVID-19, hunger and food insecurities, and climate change, such as wildfires in Australia and Arctic temperatures. The principles hinge on social responsible stewardship, corporate integrity, and climate and environmental change. Others are human security, anti-money laundering, and information communication transparency and disclosure. Now, when we look at the ESG, we look at the ESG in perspective here. Let me share the screen here. Over the past decade, regulatory pressures and investor preferences have succeeded in pushing factors related to environmental, social, and governance up the agenda towards sustainable financing in many organizations across the globe. The pressing need for sustainable financing has remained on the radar for banks and investors over a considerable period, and increasingly emerging as prioritized issue for banks and other actors within the financial sector and across other sectors. So indeed, the banks are aware of these challenges. They know the overall impact of addressing the challenge on first their operations and second on the accelerated development of the entire economy. What the identified mega trends with the strong potential of shaping the global business landscape over the next decade indeed is ESG, which is environmental, social, and governance. Some analysts asserted ESG could compel businesses across industries to transform their operating models drastically and perhaps even consider transitioning to net zero emissions in subsequent decades. However, success of the transition is contingent on massive investments, and this has the potential to create tremendous opportunities for banks. Conversely, the massive investment could pose significant risk to the business portfolios of banks if due diligence becomes elusive. Yes, in as much as it is important to pursue environmental standards, it is also important to see the eventual risk and engage in cost-benefit analysis so that it becomes a win-win situation and not a win-lose situation. Although ESG is not a new phenomenon, its implementation is now prioritized by business leaders across the globe. The change in attitude is attributed essentially to factors such as increased awareness of climate change, social inequality, and the effect of COVID-19. Survey conducted by PricewaterhouseCoopers during 2021, as cited in Vincent and McDowell 2021, in economic state of Brazil, Germany, India, UK, and US revealed 92% of business leaders, 80% of consumers, and 83% of employees believe institutions that commit to ESG policies would outlast competitors that do not. And this actually emphasized the relevance, the importance of ESG in contemporary business operations. A significant number of business leaders, that is 87%, affirmed sustained ESG performance formed an integral part of the key strategic objectives rolled out for implementation in their respective organizations. Many investors across the globe are developing great interest in indexing their investment decisions to the ESG capabilities of targeted organizations. And then what it implies is for bigwigs in investment community now, if the organization, your company is not known to be implementing, first ascribing to, and second implementing ESG related principles, then it may be difficult for you to attract their interest towards investing in your organization. The stance of these investors in recent periods is indicative of the growing importance of ESG and the need for its consideration and inclusion in any business strategy that is carefully designed to drive corporate success and assure competitive edge in the global business environment. Now let's look at the principles in ESG as a combined phenomenon. The principles in ESG in context, specifically principles 1 through 7 of sustainable banking focus on environmental and social risk management, internal environment, social and governance in the operations of banks, corporate governance and ethical standards, gender equality, as the female earlier speaker touched on, financial inclusion, resource efficiency, sustainable production and consumption, as well as reporting. It is worth noting the guidance notes cover 5 of the aforementioned core priority areas in the Ghanaian economy as they relate to the portfolio of banks. The principles provide the requisite guidance for banks to ensure due diligence and emerge with cogent decisions related to equity investments, leasing, corporate lending, small and medium-sized enterprises lending and project financing, among other pertinent lending propositions. Banks that ensure effective application of the principles emerge as pace setters and tend to possess competitive advantage in the industry. And so ESG in itself is already a hot cake within the industry. Banks have come to the realization that we need to just not adapt, but then ensure its effective implementation to be able to first compete effectively within the industry, and second, pursue an edge that will help us attract more customers than our competitors within the environment. The first principle underscores the need for banks to ensure practical identification, measurement, mitigation, and monitoring of social and environmental risks, manage footprints while identifying social and environmental opportunities inherent in their business activities. Its effective application of this principle allows banks to have positive influence on the societies in which they operate. The second principle urges investment banks to vigorously pursue the promotion of good social, governance, and environmental practices in their internal business operations. Implementation of this principle to logical conclusion has the potential to help banks reduce internal operational costs, avoid lawsuits and regulatory fines, and to attract, motivate, and retain productive workforce, among others. So at this stage, I'm trying to summarize the various principles for us to appreciate first the dynamics, second, see the extent to which banks have already recognized and have incorporated its into their operations. The third principle sheds important light on the need for banks to identify promotion of good corporate governance and ethical standards as their hallmark to enhance corporate reputation and strong credit ratings, while improving on capacity building, collaborative partnerships, productivity and efficiency through regular training. Promotion of gender equality is emphasized in the fourth principle to ensure women's economic empowerment, co-representation in leadership positions, reduce the high incidence of sexual exploitation and domestic violence, and to mitigate the potential effect of gender risk in lending portfolios. The fifth principle calls for promotion of financial inclusion to affirm Ghana's practical commitment to implementation of the Maya Declaration and initiative geared towards global. Hi.
Great.
Hi.
I think we are really with you, but because of time, we really need to wrap up now. Thank you so much. If you can do that for us within 30 seconds. Thank you.
Oh, within 30 seconds. But I think the document will be shared with everyone so that you see the extent
exactly.
Some developments have been made.
Exactly.
The detailed information will be shared with you. And so in concluding, let me touch briefly on the major stakeholders. The major stakeholders in this context are the Bank of Ghana, the Environmental Protection Agency, and the Ghana Association of Banks. These institutions are actively promoting the sustainability and then the ESG principles to ensure their effective implementation among the member banks. Now, in conclusion, I would state that factors such as environment, social and governance allow stakeholders to measure the sustainability and social impact of lending and investment institutions in society in general, and the effect on businesses in particular. The principles are proven to be a socially responsible way of identifying and measuring growth opportunities and material risk inherent in the financial sector, while taking proactive steps to protect communities and the environment. Banking institutions' strict adherence to sustainable banking principles in private and recent years has been phenomenal. The adherence is a reflection of society's desire to engage and transact business with banks characterized by strong ethical standards and values. Banks have taken proactive steps to ensure sustainable digital banking while ensuring collaboration and leveraging international partnerships to accelerate industry progress. The approach adopted by the Ghanaian banks for implementation is consistent with international standards and fits into the development needs of the country. Thank you very much.
Thank you so much, Doug. That was really insightful. I think from all that you said, there are certain key questions that we need to ask ourselves. And what are these key questions? Number one, how can we accelerate the net zero transition? Number two, how do we close the existing gap in funding? Then number three, how do we assess these funding? Number four, how does regulation contribute to this? And I can see that you also mentioned the role of the regulators in all these things. And with the banks, I think banks should be also thinking about how they can factor in ESG or sustainability in their banking programs. So thank you so much, Don. That was really, really insightful. And right now, I'd like to show you the result of the polling questions. James, can you show us? Okay. So the question was, how or have you embedded sustainability and climate goes into the strategy of your organization? I think we have 31% saying it has been deeply embedded. We have about 23% saying they have recently done that. So that is a very good one. 17% is they are still in the discussion phase and they are yet to embed it. So I think those group of people really need to speed up because there's a lot to do there's a lot to do when it comes to ESG. 10% is saying it's now being considered. So it means they are losing out on a lot of opportunities. The 10% that are saying that it's now being considered, it means a lot of opportunities is being lost that way. So kindly speed up in your implementation. Then we have about 19%. Wow, saying they are uncertain. That is an interesting outcome. So the 19% that are uncertain, we encourage you to have a discussion, start the consultation, and then make the move. So thank you very much. And then at this point, we will now go into the panel discussion where we will now deep dive into certain specific things. To handle that, we have that now introduce herself, and then now we'll handle the panel discussion. So kindly sit back, relax, and then enjoy the panel discussion. You can also post your questions to us, and then we will respond to them. Thank you very much, and then I'll hand over to Na now. Na, take over. Thanks.
Thank you, Kwabena, and thank you everyone who has made the time to join us this morning as we discuss this very pertinent issue of sustainability in the Ghanaian banking sector. My name is Na Ache Koni. I am a sustainability lawyer with Deloitte. I think we can take a moment to hear a bit about my profile.
Francis AEC is the head of partnerships and sustainable lead for Stanbic Bank Ghana. He has expansive knowledge and experience in banking spanning 2 decades in several functional areas, including retail banking, corporate banking, investment banking, and country risk management. His experience also spans Africa, Europe, and Asia. He is passionate about sustainability and at a point supported the Secretariat of the Private Sector Advisory Group for the SDG, which was the intermediary between the presidency and private sector on the SDGs. In his current role at Stanbic, he is responsible for delivering the group and country sustainability strategy for the bank. Kwabena is an assurance partner and head of Deloitte Ghana's sustainability. Na is a qualified lawyer with 12 years combined experience in environmental, social and market, legal research, strategy and consulting. Na's forte is providing strategic advice to companies and helping them embed sustainability ESG into their core business strategies. She is skilled at drafting ESG policies and guidelines, as well as designing and delivering trainings for staff, management and board members of the firm's clients. Additionally, she guides companies to develop tools, systems and processes for the effective implementation, monitoring and reporting of their sustainability and ESG strategies. Pablo Villareal Diaz is the Health, Safety and Environment Manager at Jinsa Energy Ghana Limited. Pablo's career spans over 20 years in the oil, gas, energy and manufacturing industries. Pablo graduated from the Jose Maria Vargas University in Caracas, Venezuela, as an industrial engineer and industrial hygiene and safety technician. During his career, Pablo has developed a strong expertise in health, safety and environment management. As a leader in his field, Pablo plays a key role in Jinsa's ESG commitment and implementation, ensuring the company adheres to international standards and complies with global regulations and audits. He also holds various certifications including ISO 14001 and 45001 and the NIBOS certification in process safety management. Pablo is fluent in English and Spanish. Priscilla is a banker with over a decade's experience spanning customer service, corporate banking, marketing, multi-channels, product development, and now CSR and sustainable development. With an MBA in oil and gas management from Coventry University in the UK, Priscilla brings to the table a good understanding and appreciation of the energy sector, having worked as the head of energy and public sector in SG Ghana in the past. With her current portfolio, she oversees the implementation of CSR strategy and supervises clients' projects through the bank's ENS risk management procedures. Stephen has over 10 years of experience in supervision, regulation, and related financial sector issues. He is a policy analyst and a deputy chief at the Policy and Regulations Office, Banking Supervision at Bank of Ghana. He participates actively in both domestic and international meetings and discussions around sustainability. He holds an MBA from Oklahoma Christian University in the USA and a first degree in mathematics from KMUST. He has worked with a number of international organizations as well and served on various working groups to develop global guidelines on a number of topics.
And thank you. The original plan was to hear my profile and then zoom into the profile of the panelists, but so well included. So yes, ESG, yes, sustainability, but money makes the world go round. I'm sure we can all attest to that. So that's why we have gathered the money men. Sorry, I took for feedback. Okay. So yes, ESG, yes, sustainability, but money makes the world go round, and I'm sure we can all attest to that. That is why this morning we have gathered the money men and women to discuss how they, by they I mean their respective institutions, are helping push sustainability and ESG in Ghana, all with the overall aim of attaining the UN Sustainable Development Goals. So thank you, Stephen. Thank you, Priscilla. Thank you, Francis. And thank you, Pablo, for making the time to discuss the BOG Sustainable Banking Principles and Sector Guidance Note. The document is a two-part document. We have the first part, which speaks to the principles, and then the second part, which speaks to the specific guidance notes for the various sectors. In the interest of time, discussion today will focus only on the first part, which is the sustainable banking principle. I'm sure you're all wondering how and why Genza is on an energy company is on the call this morning, but they are in here to show us their role in the discussion this morning. We should show us how they are impacted as a business or as a customer or client of the bank, how they are impacted by the sustainable banking principles. So we are ready to start, and we're going to start with Stephen. Stephen, good morning and welcome. The question is, how did we get here? We want to hear from the BOG how we got here, a little bit of historical overview and justification for the sustainable banking principles and sector guidance books.
All right. Thank you, Na. I hope I can be heard clearly.
I can hear you.
Thanks so much. And good morning to you all. Good morning to all the stakeholders. And first of all, I would like to thank the Deloitte, of course, for organizing such a program or this platform for this conversation or this morning conversation with respect of the ESG in the banking industry. Of course, as a central bank, we normally take this as very important. We take it as an opportunity to discuss some key policy initiatives within the banking industry. And as you all bear, this morning discussion is very critical to the bank. So let me move on to the more substantive question that you have asked us. So how did we get here? Now, the mandate of the central bank, Bank of Ghana, as you all know, is to maintain price stability, and of course, also to contribute to the financial stability. Now, for us, we see sustainability as a key component of financial stability. Of course, when we look at the financial stability, we are looking at the safety and soundness of the institutions under our jurisdiction. In fact, if you currently have been studying international development or global development, you will see that, excuse me, central banks across the globe are all taking the initiative to push sustainability agenda. And because the earlier speakers have touched on the benefits, or they have touched on some of the elements, I wouldn't want to go there. But the issue is that the environmental and social issues are presenting risk to the system, which as a regulator for us, our focus is to ensure the safety and soundness of our financial institutions. Our financial institutions under our jurisdiction do finance some of these activities that do impact the environment negatively. For that matter, it is important that they begin to really take the initiative that as part of their risk management practices, begin to consider ESG within their operation. So Bank of Ghana, understanding this whole concept, and of course, understanding the implication of the climate change to the our economy, of course, the macro economy of which the financial institutions are all exposed. Of course, if you look at currently, in some way, I think 2017, His Excellency the President already gave us a statistics of course, indicating that Ghana, we were losing our forest, because the climate were impacting us to the extent that we're losing our forest, about 65,000 hectares of our forest per year. And that in itself, if we project and we do the analysis by 2050, we may have lost all our forests. If that is done, or if that happens, you and I know the implication it has on food production. When food production is affected, it has implication on what? The macro parameters. Of course, the inflation will skyrocket here and there. As you have seen, the COVID is impacting us, and we are all realizing it. And then, of course, it will have implication on your GDP. It will have implication on your current account, among others that you can think of. So there was a need for us as regulators, if you look at our mandate as the price stability, and of course also to contribute to the stability of the system, we had to do something. And that is where Mr. Wua really touched on the fact that in 2015, the governor then, of course, had to set up a committee comprising of the Bank of Ghana and, of course, the EPA, and then also the Ghana Association of Bankers, to really come up with a set of principles that will help us to be able to manage this risk within the system, because the climate is happening, whether we like it or not, it's happening. And of course, we do have our own also other environmental issues, which our earlier speakers have touched on: pollution, we have biodiversity issues, we have some of the social issues. You see, our population is increasing. By 2015, Ghana is going to hit more than maybe 50 million. This is going to present us with some social issues we have to deal with as a country. So then, of course, BOD see the need for us to really begin to take the action now, and then come up with some prudential policies that will help us to be able to have our hands around this risk. At the end of the day, our focus is how do we manage this risk, because the risk has come. So just to summarize as to how we got here, is that the bottom line is the risk. The principles as we issue have been touched on by Mr. Wua, but let me just take maybe 5 seconds to just raise, maybe to bring that awareness on that principle. Number one is that financial institutions will identify, and after they have identified, they should be able to measure, and of course, they should also be able to mitigate and monitor environmental and social risk within their operations, and not only their operations, but then with their clients. Now, when we come to principle 2, the same thing will be looked at, but this time we are looking at the internal operations of the bank. Then principle 3 looks at promotion of the corporate governance, and of course, on unethical issues, the way we don't want banks to really promote unethical issues. So then they should be able to see how they can improve on good corporate governance within their operation. I'm sorry. And then principle 4, we are looking at gender equality. Principle 5, we are focusing also on financial inclusion. Principle 6 is looking at resource efficiency, which the Ghana Association of Bankers touch on. And then the last principle, we are looking at reporting, because we want the financial institutions to begin to report on the what they are doing, of course, when it comes to the principles that we have issued, the effort they are doing. They should let their investors know, because investors sometimes want to know what you are doing to make decisions, right? So we want you to disclose this in your annual report. We want you to report to us, and of course, for investors to make their own analysis as to whether to continue to do business with you or not. And there are also some benefit to this. It's not only about risk, there are opportunities, there are finances that are available, that if you adopt these principles in your operations, you are able to, of course, attract these funds for your own business. So in a nutshell, I would say that that is where the regulator will stand. And probably maybe subsequent discussions will be able to be detailed and give you more information in respect of the journey where we have reached. In fact, the principles were launched in 2019 by His Excellency, the Vice President, and our dear Governor, Dr. Addison. And it is expected that banks adopt these principles and see to the full implementation of this principle. So let me probably then end here and give the other panels the chance, of course, as the questions comes in, to be able to throw more light on. Thank you, now.
Thank you, Stephen, and thank you for doing part of my work for me by listing out the principles and what's given that concise overview of what each of the principles are about. So, Priscilla, we want to look at principle 1 from the perspective of loan portfolios, how you have integrated the whole environmental and social risk management in your process. We want to understand what it's like for the bank and whether it's drastically shifted how the banks or your bank originally operated in its risk assessment processes.
Thank you, Na. Good morning, everyone, and good morning to my fellow panelists. Okay, so as Mr. Stephen Amma mentioned, the principle 1 looks at identifying and screening, measuring or evaluating, controlling and mitigating, and monitoring. Okay, so when you say identifying, the questions come to play, or screening, by what are we screening, and what are we identifying? For us, the ESMS process is incorporated in all our clients' engagements at various different levels, So at the client's onboarding stage, at the credit processing stage, we get to apply ESMS. So for us, we have our own ESMS policy as a bank. Okay, we draw this from our group policy, and the policy is organic, by the way. When we say organic, it means that it's subject to continuous review, as the risk landscape on both the international front and the local front changes. We also make the necessary changes to our policy. We also look at the sustainable banking principles. We also give considerations to EPA principles and policies. We look at Equator principles. We look at International Labour Organization core conventions, which is ratified by Ghana, and other ENS conventions and agreements. So when we look at our policy, we have an exclusion. Okay, so the exclusion list are companies or businesses that we will not touch. Okay, we will not deal with customers or companies who are into cluster bomb, anti-personnel mines, or unbonded asbestos. Then we have the cross-sectorial policies. So the cross-sectorial policies cut across. So we are looking at governance, ethics, corruption, environmental management issues such as biodiversity, climate change, pollution, energy usage, occupational health and safety, labor laws. We consider that. Then we have our sector-specific policies. So example, if we are dealing with somebody in the mining sector, we will make sure that their activity is not going to impact the natural habitat. We'll make sure that it's not going to affect the clearance or affect any forest. We'll make sure that they don't indulge in submarine tailing disposal. So certain things like that are looked at specifically. We have 2 levels of assessment. We have the client assessment and we have the transactional assessment. So for the client assessment, we are looking at capacity.
okay, the client's capacity, their commitments, their track record or reputation. And then when it comes to the transaction, we are looking at the transaction specific, and its impact on the environment. I mean, all in all, what we are aiming to do is to avoid, reduce, or compensate where any negative ENS, is going to be detected. As a bank, our corporate purpose is to build together with our clients a better sustainable future through responsible and innovative financial solutions. So we engage having this at the back of our minds. So after identifying, we do the evaluation. So in the evaluation, that's when we do the documentation check. We look at what ESMS processes they have in place. We have our ENS checklist. We have a questionnaire. We look at the categorization. We do all of that. We look at their permits and documentations during the evaluation process. Then we have the controls. So this is where we institute certain covenants. Okay, we have pre-dispersal covenants. We have post-dispersal covenants based on what we see during the assessment. We also ask for clients to put together strategies to mitigate identified risk where same is pertinent. And then we have our offer letter documentation. And of course, what you don't monitor or what you don't inspect doesn't get done. So we monitor. We monitor by way of visits. We visit, we have scheduled visits, and we have ad hoc visits. Sometimes when you tell the client you're coming, they put their house in order before you get there. So we have ad hoc visits where we just show up, hey, we're in the neighborhood, we came to see, how everything is going. We have those visits as well. And then we look at the progress on their ENS action plan, where same is drawn. We will monitor progress, how they are doing, how they are meeting those action plans. And then we have our annual review and an ENS review every 3 years. We do this by using our frontliners. Okay, so the frontliners are trained. SG has fully incorporated ENS. So we have an ESN officer, we have an ENS manager, all reporting into board. Now we train our frontliners every year. We have scheduled training for the various sectors. We have the global general training and then the sectorial training. And then we also sit at credit committee. So there's constant engagement when things come up for various sectors and there are some gray areas. We get opportunity to straighten that. We sent out memos, we sent out circulars. So there's consistent engagement to ensure that the ENS policy, which is organic and changing, is being used by the frontliners who engage their clients directly. So for SG, this is how we incorporate ESG in our client engagement process. Thank you.
Thank you, Priscilla. That's quite an extensive process, and I think that is quite reflective of how much you have incorporated sustainability in your operation. And I noted that you mentioned that it's part of a global strategy for SG. So a quick question, and it's a yes or no question, essentially asking whether this is something that you started before the Sustainable Banking Principles were published, or it was triggered by the publication.
Thank you, Na. So we started this before the Sustainable Banking Principles were published. We started this as 2013. Coming from Global Bank, they have always been aware. The conversation has been at the global level for much longer than it's got to Ghana. So yes, we started way back in 2015. Yeah.
That's like half a decade of a head start, and it explains a lot. So Pablo, we are coming to you. You have been subjected to the iron process Priscilla has just described. So we want to hear from you. Was this the first time your company had to go through such a process? Was it an easy one for you? Did you have challenges that made you question whether or not you should remain committed to the goal, or to just give up and then do something else?
All right. Thank you, Na. Good morning, everyone. Thank you so much for having Johnson Energy representing on this webinar. It's a really pleasure for us to be here today with all of you. So hello to all the panelists as well. So before maybe share our experience now, I would like to do a little bit about our organization, so everyone can understand the context. where Genser operates. So Genser Energy is a diversified African energy company with more than 15 years in the business. And usually we operate with power plants, also in the midstream and gas distribution sectors. Over the past years, Genser has built 7 power plants in Africa, Ghana, mainly Ghana, approximately 200 megawatts, and also a gas pipeline networks around 300 kilometers. So this diversification of business, we achieve it with the relation of the bank financings. So in these terms, Genser Energy deal with a consortium of banks, including Ghanaian bank and international bank as well. So our relationships and financial commitment are made through subsidiaries in Ghana. So the bank financings brought additional requirements to Genser, including the compliance with the Equator Principles and the World Bank IFC performance standard. So actually, all of the banks are related to this, are subscribed to these requirements. So in this sense, our operations, or all the operations into our organization, are based on these guidelines as part of the environmental and social risk management. So from our practice and experience, I can mention to you some positive impacts that we can achieve in these new incorporations of the ESG as part of the work change. So one of them is the implementation of the Environmental Social Action Plan. This is one of the monitoring process where all the diligences that we carry out through our legal compliance, instances, national or international requirements, we have the opportunity to be monitored by a lender's technical advisor. So this relationship with the bank have the opportunity to Genser. We account with international company like this LTA, that this is Advision, is a worldly partner group. So through this technical advisor that is hired from the bank lenders, we ensure the compliance of the established requirements and commitments. So also following this environmental social action plan, in Genser we achieved, let me say, 3 main improvements. One of them is, first, is significant improvements in our integrity, health, safety, and environment management system. So this improvement allow us to advance in close different gaps in our process, like also get greater participation with environment aspects, improvements in our relations with the communities, and also to improve mechanisms to respond to the concerns through our participations and the right engagement where Genser Energy operates. Secondly, I can mention about the improvement related to the environmental and social impact assessments in all our operations, and also in the applicability of the required environment permits. And another one, the implementation of biodiversity plans together with the environmental protection actions. So we are more conscious about the environmental activities to protect also the operations from our organizations, and this from our company has been achieved in a learning process. So as an organizational, we are learning in this process as well. So mention something about the effects that we're dealing with bank. I also can mention some key points. One of them is that Genser ensures adequate technical support to specialist strategy and consultants, environmental consultants. So we are not working alone. So we try to work together with main companies that can join to us to meet all the requirements in the term of the ESG. Also, from our experience, one of the main targets that we achieve and the goal that we have is that together with the lender support, Genser has developed the zero carbon strategy to achieve zero environmental and social impacts. So this plan is projected to be achieved in 2035. And at the moment is one of the strong drivers of our missions, mission statement. So in general, Genser have achieved an acceptable level of satisfactions of compliance with the environmental and social aspect in our organizations. So really our experience with bank has been satisfactory and highly productive so far. So that is something that we are learning, and we are continuing improvement as part of the African company. Thank you.
Thank you, Pablo. And from the sound of things, you are enjoying or reaping the benefits of integrating sustainability and ESG into your operations. I have a question on other external drivers, but I don't want us to get sidetracked. So I want to move on to we have on in the session William Oheniadu, who is a risk management expert with Deloitte, and he will briefly share with us his insights on how the process has been, or how the process of integrating the sustainable banking principles has played out, essentially for the banks and for businesses that are seeking to access lending facilities from banks in Ghana. William, can you hear us? Over to you.
Yes, I can hear you now. Thank you. So just to be quite succinct on what I'm going to talk about. So when it comes to the principles, the sustainable principles, where Bank of Ghana has been able to, streamline things in terms of the guidance to help banks implement its objectives. The core thing, two core principles which resonate with my line of work and what actually really helps banks to actually implement this is the principle 1 and principle 3. And the reason why I see this is usually when you are trying to implement such directives, there has to be a strong tone from the top, setting things right, or the fundamentals right, just so that you will be able to implement what is expected from the directive. So the principle 1, which talks about the environmental and social risk management aspect of the principle, is basically setting the tone for what is required for you to more or less start off with this directive. And I must say that for every business, to be quite frank, for every business to really have such a directive well implemented, you should have your policies in place, and start off by your strategy as well, because at the end of the day, from the tone, using the tone from the top approach, when you have a strategy which embeds this type of environmental and social and governance aspect in your strategy, it more or less sets the tone for the operational aspect of the business to follow suit. So in setting the strategy, you would then have to have your policies in place, which will more or less set as a reference point or a guidance, then your procedures as well, to also more or less help those at the operational level to know what they need to do to actually implement this directive. Then from there, you could go ahead with the trainings, and obviously it ends up with the reporting aspect. And this is quite helpful when at least that first principle is well catered for. Then looking at it from the principle 3, where it talks about governance, of course, it's quite links with what I was saying, setting the tone from the top. So when you talk about governance, it's all about how you direct your company, lead and direct your company. And in this instance, we are talking about the financial institution. So when you have a good corporate governance structure set in place, for instance, the Bank of Ghana Good Corporate Governance Directive really set a good roadmap, which can be a benchmark for most. I think I know most banking institutions are following suit in implementing what is required. So and also there are other directives or guides from the Corporate UK Bribery Act. There are so many guides which most companies can make reference to. So once you have all these two principles that I've mentioned in place, it's more or less sets the ball rolling for you to be able to implement the other aspect of the principles from the inclusion, etc. So this is just a tidbit of what, from a risk management perspective, you would need to have in place, just so that once you delve into the actual process in identifying, measuring, and monitoring, mitigating the risk identified in this ESG route or journey, at least you would have a strong foundation to be able to deliver what is expected. And I would just like to chip in something little. And I know from this point, once most businesses are able to implement this, it helps them in doing their ESG due diligence in terms of identifying the risk associated with the kind of facilities that will be given to their clients, especially coming from the customer point of view, having proper understanding of their business to ensure that they are lending in the most, environmentally friendly way or green way, so to speak. So that is basically it for my end, and thank you very much for your time.
Thank you, William. Still on the question of the of principle one, which is the ESR. We've heard a lot about the need to align with other global standards, such as the UN, UNEP FI, the UN Global Compact, etc. Francis, we are moving to you. What's been your experience? Has it been seamless? Have there been struggles when it comes to trying to, because like different people are asking for sometimes similar, but sometimes quite different things as well. So how are you bringing all of these things together to make sure that you are answering to all of these different requirements?
Thank you, Na, and good day to my fellow panelists and to all those on the call. And before I answer the question, I want to make reference to a very favorite quote of mine from Seattle, who is a Native American leader. He says that we did not inherit the earth from our ancestors. We have actually borrowed it from our children, the children that are unborn. And for me, this is the very essence of why we're having this conversation. And from the global level to country level to corporates and to individuals, we need to be responsible in the way that we live, we operate as businesses, so that when we are no more, the children who take over from us will succeed on earth or an environment that was as good as we met it. So to your question, now, we have been aligned to the global standards. And we actually in 2009 signed up to the Equitable Principles. And we are actually a founding member of the UN Responsible Banking Guidelines as well. And it has shaped the way in which we have done business in the bank. So we have designed an ENS risk policy as a result of that, which has standards and exceptions to legislation the regional has. And it allows us to be able to assess and to make sure that our portfolio of lending activities conform to these principles. And the good thing is that we got vetted by the IFC, and we got a thumbs up that our ENS risk policies were state of the art. Obviously, we have drawn experience from our group, who before 2019, when the Bank of Ghana launched the Sustainable Banking Principles, have been far advanced in the way that we manage our ESG and sustainability. Our experience has been good. I mean, this last year alone, 87 applications within the corporate and investment banking division were screened for ENS risk. I'm happy to say that a lot of them went well, they were low risk, but there were a couple of them that were medium and high risk. And what we tend to do is that we do a little bit more scrutiny around how we want to ensure that they reduce their greenhouse gas emissions, for instance, and the way that they impact the environment. For our business and commercial clients, there were 361 applications that were screened using our ENS risk tool. And this were those who were severely impacted, mainly were in the agricultural sector and also in the SME space. But then again, it gives us an overall view of how our portfolio is managed. The challenge has been how the vertical integration is done. We try as much as possible to make sure that we do the right thing and we guide our clients to also get better. But monitoring is a big issue, and I think that the regulator and the government should do a little bit more to ensure that as the banks conform and as we help our clients to conform, the whole environment is unified in the way that we manage ESG and sustainability in line with global standards.
Okay, so Francis, you can outsource monitoring to me, but that's just by the way. So you've talked about how you put your clients and customers through the strict test. And my question to you is, what are you as a bank doing internally to ensure compliance? So we are moving out of the arena of what your clients are doing, what your customers are doing, what you're putting your money to. We want to know what you are doing internally as a bank. And that's essentially, that speaks to principle 2, which is looking at the internal, how the banks are as institutions incorporating ESG in their own operations and activities. So on principle 2, Francis, what say ye?
Thank you, Ma. We look at it from 2 dimensions. Okay, on the governance side, if you look at the definition of ESG, there's a governance component of it. And that essentially is how policy is set, direction is given from the board level, from the executive level, up to management level, how we operate as a bank. So the G is very critical in the whole equation of how we manage internally our ESG, the things that we do to ensure that we conform. And the board is very keen on how we do this. I want to say that even last week, there was some training for the board of directors. We got facilitators from the group to make sure that they are aware with topical developments in the area of ESG, so that when they are reviewing the updates that come to them from the business, they are able to scrutinize and ask the appropriate questions to ensure that those who are the operators on the ground are also doing the right thing. The other thing is that we have set ourselves targets internally to also reduce our footprint. Okay? And one of the things that we have done is basically to look at how we introduce energy reduction strategies in all the assets that we have. So our head office building in our branches, what do we need to do to ensure that we use less energy? We tried in the past to install solar energy in panels in some of our selected branches. The issue is that there was a lack of net metering in Ghana, and so we're not able to continue with that. We have introduced sensors, and when people leave a room, the lights go off by itself. We have created awareness within the bank, trained people to be conscious of how they use electricity in the office. If I leave a meeting room, for instance, I turn off the AC and I turn off the lights. It's become a practice internally to ensure that we reduce our greenhouse gas emissions. The other area is around waste management. You admit that we use a lot of paper, we generate a lot of waste through the food that we eat in the office, and people go out to buy food, etc. The awareness is also there in the way that we manage some of these things. We have introduced the separation of waste in offices and in the branches. We have bins that allows you to do plastics, cans, and then domestic waste or the regular waste, so that we separate these things and ensure that once the waste management companies come, they also go recycle appropriately. So these are the things that we are doing internally to ensure that we as a bank also do our part ensure that the environment is safe, safer place to live in. And finally, I want to also speak to the challenges. I mean, in Ghana, I wish we could have a proper waste recycling plan, because I have made some observations and say that some of these waste vendors come and say we do proper segregation and recycling, but then they put all the waste in one truck and send away. What is the
Point.
I mean, guarantee that these guys go and actually separate, because they put everything in one truck and then they go away. And that for me is something that at the policy level, we need to ensure that we encourage, we provide the finance and support to some of these vendors to properly segregate waste and recycle them. Thank you.
That's a very important point, because I was going to ask you that once you do the segregation at your level, what happens next? But you already tackled that, and I'm sure that it's something, because even on the national front, I know that the plans are far advanced in making sure that I'm putting up recycling plants and trying to introduce circularity in our system. So hopefully, I hope it's something that will happen sooner rather than later. So you mentioned two things, energy management and then also governance. So at this point, I don't even know whether I want to go with continue the conversation on corporate governance or move to resource efficiency, which is principle 6. But I think in order not to confuse the participants, we will try and discuss the principles in chronological order. So we'll move on 1, 2, and then right through to 7. So Priscilla, will you want to have a quick chat about principle 3, which is corporate governance and ethical standard? You mentioned that SG was already on that sustainability journey before the publication of the sustainable banking principles and sector guidance note. But my question is, following the publication, has your KYC process changed? And are you looking more into how the companies you're doing business with are handling their corporate governance issues? How is your anti-corruption process or lens looking like? Is this something that you are mindful of as a bank?
Thank you, Na. Yes, our KYC process has been impacted. You know, today on account onboarding stage, of course, exclusion list, the frontliners know which clients right from the start we cannot engage. And when they are onboarding clients in specific sectors, they escalate to the ESG team for us to give them a checklist of some of the documentations that we look out for. So they engage the clients to make sure they collate those documentations to allow for our assessments and guidance. Indeed, the whole ESG sustainability conversation is still quite novel in Ghana. So if you check the survey that we just did earlier, a lot of people are still at the, onboarding stage, or they're trying to put things together and all of that. So sometimes you see that the clients don't have anything in place, but they have efforts, they have plans, they have strategies. So we take note of that as well, and we work and guide them through setting up, their ESG or ENS policies and strategies. The bank has deployed various policies, in line with identification and management of bribery and corruption. Our SG Code of Conduct was updated in 2018 to factor some of these new things, that come to play. We have combating bribery and corruption. We have gifts, business meals, and external event instructions. That was just updated in 2021. So what's hitherto we would, turn a blind eye to, today we are sensitizing all staff that it's something that we want them to be cautious and aware of. We also updated our financial crime and compliance regulation instructions in 2020. The instruction focuses on AML, CFT, international sanctions, and correspondent banking, etc. We have the FATCA So some time ago, we know the US came around trying to identify US persons who are evading tax, who are in the banking system. And, you know, we gladly indulge and oblige them, you know, passing our own staff and customers through the whole FATCA, you know, process. So yes, it's been incorporated through various regulatory policies. The relevant notices and legislations on good corporate governance practices, procedures, including AML, are displayed in our branches, you know, clearly displayed in our branches for information of customers. The requisite information is posted on our website as well. So definitely these changes are there, you know, and we have communicated them as well. You know, relationship managers and officers, you know, during their engagement with clients, also, you know, sensitize them that this is the trajectory that we are on. We sensitize them, we make them aware, and, you know, they try to stay within the way we do our business. You know, ESG is central, you know, so right from the board level, we have the support to go all out, you know, and so we work like that. We have deployed policies in identification and reporting of clients for tax transparency, like I mentioned earlier. We have common reporting standards, obligations within Société Générale, a circular that was also updated in 2018. And then we have the foreign account tax compliance obligations within SG, also updated in 2018. So all these are being done to ensure that at various levels, you know, regulation is being passed, updates are being made to ensure that we are in line. Yeah.
I have a lot of follow-up questions, particularly on the anti-money laundering and terrorism financing, but we are pressed for time, so maybe we'll have a side chat about that later. Yeah, so that's it for principle 3 when it comes to corporate governance and then ethical standards. And we can all understand and see why it's very important that businesses are paying their taxes. They are being tax compliant because it speaks to the ethics of the business as well. And it promotes social equity, because I mean, at the end of the day, it means there's money available for government interventions, amongst other things. And then there's also the issue of the importance of anti-bribery and anti-corruption enforcement, because all of those things also go to undermine development and further create disparity between the haves and the have-nots. So yes, it's a good thing. It's a good thing to keep our eye out on. And so with that, we are going to move on to the question of gender equality, because that's another way the banking principles look to bridge the gap between the marginalized in society and those who have traditionally benefited from how the systems have operated in the past. So when it comes to gender equality, the question is, what are we doing as a people? And in this case, what are the banks doing to make sure that women are essentially catching up? So women in the banks. And then also when it comes to businesses, is there any additional support for women-owned or women-led businesses? So Francis, I think you can start by taking it from the perspective of your bank. What's your bank doing? Are you offering training, additional training to make sure that women are being equipped to sit at the table of competence and decision making level?
Thank you, Una. The issue about gender equality is quite topical in the bank, and it's something that the bank holds dear. Before the introduction of the sustainable banking principles, the bank had a program called He for She. And the intention of that program was to move the composition of the board, executive, managerial level roles from something like 20%, a little bit above 20% to a minimum of 40% within the shortest possible time. He for she provided opportunities for women to develop themselves, encourage them to apply for senior management positions when they became available. Since the SBPs were introduced, we have now revised the he for she and have developed a proper gender equality program that seeks to give women a bit more. I'm happy to say that today, if you look at the board composition of the bank, the chairperson is a woman, and the ratio of female to male is around 7%. We are very, very close to achieving minimum 40% that's set up at the bank. If you look at the executive composition as well, we have 5 women out of the 10. So we are at 50%. Then if you look at the management, out of 47, 18% of them are women. As a bank, if you add this all up, we are around 36%. So we are working hard to make sure that we get to the minimum 40% within the shortest possible time. But for us as a bank, we also want to put the right people in the right place. And to be able to do that, we need to give women the opportunity to develop internally and also externally. So last year, for instance, we have the Education Endowment Fund that supported female students in universities by giving them a laptop. It was available to both male and female, but our emphasis was more around female. So KNUST benefited the most from our endowment fund because of the laptops that we gave to students. And then also, if you go to Apiati, where there was this last year, we took 100 girl students through a STEM program, sponsored them through a STEM program. And the intention of that and other interventions that we have made is to give them the confidence to set up goals and prepare to take their places in society. Unfortunately, we do not have a specific program that supports businesses led by women, but it's something that is key on the table for discussion. And we are looking at how we can set up a specific program that supports women that are led by women.
Okay, so when it comes to what you're doing internally as in Stanbic, are you facing any forms of opposition? Are people resisting the idea that that special initiative is needed to make sure that women are climbing up? Because research shows or has shown that it's not as a lack of competence that women are not up there, but it's more of an opportunity issue. So do you face resistance internally from mostly from males who think that special initiatives are not necessary for the promotion of gender equality?
I joined Stanbic some 8 years ago, and I want to share a story to respond to your question. I was required to hire a manager, and the best person for the role was a female. She was 7 months pregnant. We wanted somebody to do the job immediately. I've never seen this done anywhere before. She was hired, her role was delayed. She went home, had a baby, and came back into the job. I'm happy to say that she is one of our star female managers in the bank. And this is a bank that takes women seriously. I think the bank loves the women more than the men, which is a good thing. And so that answers your question. The opposition in the bank is negligible. I don't see the men feeling neglected or being unsupportive of our he for she policy and new gender equality program. At the management level, everybody's supportive and very encouraging. We have a very strong women-based management level, at the management level, who lead programs, who do a lot of fora to engage the women to understand the issues that they have with the bank. And they take it all the way to the executive level for conversations to see how they can intervene. So there is very little opposition or no opposition at all.
That's great to hear. And I'm still on the question of the marginalized. I think it's a good point to move on. A good point to move on to Principle 5, which is financial inclusion. And the whole idea is we want to make sure that the underbanked and unbanked also have access to these financial interventions. So is there anything that Stanbic is doing especially to make sure that this is happening?
Yes, we are. Yeah. So I mentioned, if you look at the barriers to entry for the unbanked into the financial services sector, one is financial literacy. The other one is a branch network, and two others, I can't remember. On branch network, what we cannot do because of the cost of building up branches, staffing it up, is we're trying to go digital. And we are working with fintechs especially who have very low cost operations that allows us to reach a wider community in the country, especially the unbanked. And so we are looking at solutions around deposit taking, where we provide a little bit more attractive rates to these unbanked people so that they're encouraged to save and plan for the future. In terms of the financial literacy, we've done a lot of training across the country, and I want to a couple of them. So the 100 girls that were trained at PhD is an example. And we have a boot camp every year. And last year, we trained 250 high school girls just to empower them and to develop them. So try to plan and be objective about what they want to do, future set goals, and allow them so they can conquer the world of science. And then we worked with the Art Foundation and the Toronto Club and provided financial literacy to 3 million Ghanaians, many of whom are women. So that is the effort we're making. To be honest with you, the barriers, one thing that the Bank of Ghana did not put in the guidelines for the principles is the cost of serving some of these unbanked. Cost of capital is so high. I mean, if you look at where interest rates are here today, it'll be difficult to actually lend to the unbanked. So what we can do is to encourage them to save and to plan their future alongside, and also to equip them with financial literacy that allows them to pick up our products and services. Because the industry products and services can be complex, and if you're not financially literate, it'll be very difficult to subscribe to them.
Okay, I have a lot of follow-up questions, but unfortunately, I don't know how we're going to do this. We're running out of time. We have just about 20 minutes to go, and we want to give the participants an opportunity to ask questions. So we're going to move on to what's the implementation rate has been like from the perspective of the Bank of Ghana, whether they are having more and more people, more and more banks since the inception comply with the implementation roadmap. We'll have a bit of talk about the reporting, what reporting has been like if we get a chance. But we cannot leave the conversation without hearing from Stephen on what implementation has been like, whether banks are being compliant, and especially with respect to their implementation roadmap that is set out following the publication of the banking principles.
Thank you, Na. I think it's very interesting hearing the submission from the various speakers, very interesting. But in respect of the implementation, yes, of course, the implementation commenced in 2020. That was after the launch of the principle in 2019. The bank then, of course, with key stakeholders, had to design a template that will help us to foresee the compliance level of the principles, of course, from the bank's side. So we designed a template for them, and that's, we have been, we've told them to submit, that is semi-annual. We have been receiving this information. We've seen that, of course, all the 23 banks have adopted the principles. The point is that there's a business case for this. It's not like the bank is trying to force something down their throat. But if they really want to continue to exist and to provide, jobs for people, to maintain their jobs, and of course to support the economy, that is the way forward. So all of the 23 banks have adopted these principles. It's encouraging. Of course, there are some areas that are of concern, which even as the COVID is over, of course, this report comes in offsite. We'll be going on site to check the credibility of the data, as I've seen somebody submitting that want to know how the banks check the credibility of the data as submitted by their clients. These are things that for us, we'll be able to verify some of these things when we go on site. Of course, if you say that the bank has put in, for instance, governance structure, for instance, the client has put in a robust governance structure within that helps to implement these. What are the evidence? What is it that you are going to see? What are the evidence to show? So these are things that will come up later. But of course, just to stick to your question, we think that the implementation level, the adoption of the principle by the banks have been very interesting. It's encouraging, and we'll encourage more of that. Of course, we're going to do more dialoguing with them to see the areas of concern and where we have to all judge to see the way forward clearly, because we have been working together from the beginning, this whole designing of the whole principles and implementation. The GAP, which is the Ghana Association of Bankers, and of course the EPA, have all been key stakeholders that we've been working with, because we don't want to leave anyone behind. So I think, in a nutshell, and for the sake of time, I would say that the implementation has been encouraging.
Okay, I was going to ask whether there are any sanctions, whether it's intended to be punitive, but I think the answer is in what you said, that you're working together. So the whole idea is for willing participation, so that it's not like we are pushing something down anybody's throat. So I think with that, I wish we could discuss Principle 6 and 7 a bit more. Principle 6 is essentially talking about resource efficiency, sustainable production and consumption. And then Principle 7 is reporting. So what we're going to do is we're going to give an opportunity for the the participants to ask questions. And then maybe in the course of answering the questions, we'll get a chance to speak to reporting. If not, then we can make it part of our closing remarks. And yes, so I'm going to turn to the technical team to share some questions with us. And then in the meantime, let's see if any hands are up. Give me a second to find that. Okay, so I see that 5 people have their hands up. Kobna, I'm going to unmute your mic so that you can ask your question. And before we move on to that, the questions should be directed to me, and then I will assign the questions to a member of the panel that I think is most suited to answer the question. So Kobna.
Yeah, thank you. Now, so this is just a quick input. So, especially when William was speaking, he made mention of, he spoke about it from the risk management perspective, and I think we've done very well talking about the risks. And I thought that we should also find a way of saying something small about the opportunities that come with managing risks. So you would realize that the principle 1. It's not just looking at the risks, there are also opportunities that you find in risk management. So for instance, if a manufacturer who is a client had a manufacturing process that is becoming inefficient, And that is a risk to you as a bank because, of course, they are not going to be operationally efficient. You could also, in addressing the problem, look at, a way of coming up with a product that enables them to, retrofit machinery or, modify part of the manufacturing process that enables them to achieve some level of, efficiency. And that could also be captured as part of sustainability. So basically, that's just what I wanted to highlight so that we can also address that. Thank you so much.
Thank you, Kobna. There's a very important point because when it comes to ESG, really, it's about looking at the risks and opportunities associated with sustainability. We are moving on to Kwejo Jan.
Yes, no, thank you very much. So it's a contribution. So I think when Priscilla was speaking, there's a last leg when it comes to integrating whatever actions into the legal documents that will eventually be sent.
Oh, sorry, did I mute you?
I'm not sure
Hello?
if you're talking to me. Hello, I'm not sure if you're talking.
I accidentally muted you, so please go on.
So should I start or where? Well,
continue from where you ended.
So the second thing I wanted to ask is about what the banks or maybe BOG is doing about transition risk and what their thoughts are so far as transition risk is concerned. Yes.
Yeah, so can I go ahead now?
Yes, Stephen.
Yeah, so in respect of transition risks, if you really look at the documents that we issue, of course, we have some elements of the climate change that we wanted to address, the emissions here and there, but the document actually didn't focus specifically on transition and physical risk, which are the two main drivers of the climate change. Our expectation is that going forward, we focus specifically on these two elements and address them, and then of course provide for you the supervisory expectations and what we do expect you to do. But if you do implement the current document we have sent to you, of course, is the principles. If you implement fully the principle, you will see that you are even implementing or in a way addressing the transition issues if we have to come up with any guidelines or directive in the future, because we are addressing these emission releases, some of these governance issues that you have to address regarding the transition risk, the strategy, the risk management, which we have touched on. So of course, our eyes are on it, and I think for the sake of time, we can't go deep into or details into some of these discussions. But of course, work is ongoing in that area, and it will not be long to let you know exactly our position in respect of these two drivers of climate change. Thank you.
Thank you, Stephen. We're going to take a third question. Unfortunately, then we'll read questions from the Q&A because we are really pressed for time. So Mr. Suleiman Kone of the Ghana Chamber of Mines.
Thank you very much. Now, I think this is just a high-level question. Representing the mining industry, speaking about sustainability in the context of finance and the principles of the Bank of Ghana. I just want to have a view of how the finance houses in this country find their relationship with the various mining companies they actually transact with as far as ESG is concerned. How well are they doing? What are the gaps? What can we do to improve their performance, so to speak?
Thank you. I'm going to give Francis a chance to answer in 2 sentences, and then Priscilla will also give her perspective in 2 sentences as well. So very concise response.
Hello, now can you repeat the question for me again?
So essentially what Mr. Kone wants to know is he is coming from the Ghana Chamber of Mines, and what he wants to know is what's the relationship with banks and the mining sector like? And I'm sure it's in context of the ESRM process. So essentially what he's asking is, how are you working together to make sure that these mining businesses are operating in an environmentally aware and socially conscious manner? So are you sending people, are you refusing to do business with them because of the nature of what they do, or do you have ways of making sure that you work together to ensure environmental and social compliance?
Thank you, Na, and thanks for the contribution from our guests. So to your point, we do work with the mines. We have relationships with almost all the big mines in Ghana. What we do with them is that we have a conversation. We have our ENS policy that has a checklist of things that we expect them to do to be able to conform or comply with the checklist. So they may or may not meet all of them, but we work with them to help mitigate those risks that we identify. As I said earlier on in my presentation, when you are medium to high risk, we perform additional due diligence on yourself. And in the facility letter, which is a legal document that we sign with the mining company, we ensure that we put in covenants that encourage them. It's not to say that we don't want to lend to you or we want you to go down. It is an encouragement for you to look at those risks that were identified and discussed with you. And then we set up milestones for you to achieve them. Mining is an important sector which we cannot ignore, but we also want to ensure that we mine responsibly. Thank you.
Thank you. Before Priscilla comes in with her perspective, I'm going to crave the indulgence of the participants. Kindly, that's just 10 minutes of your afternoon so that we can make sure that we round up this very interesting session well in a good place. So Priscilla, please, in 2 sentences, how are you working with mining companies?
Yes, so just as Francis said, we don't shun their business or turn them away. The purpose of ESG is not to kill businesses. Mining is an important aspect of the economy, but we make sure that identified risks are well mitigated and there's compensation where there's negative impact on the environment. We find that most mining companies are quite compliant. Most of them have health, safety, and environmental officers, incorporated in their setup. So yes, we do work with the mines, and we have specific sectorial policies that we take them through, and most of the time they meet the necessary KPIs to qualify them for financing. Yeah.
Okay, so Priscilla, don't go yet. We have a question on agric, the agric sector. An attendee wants to know what you're doing in that space and what's the size of your loan portfolio for the agri sector is. It's okay if you don't have details in terms of numbers, so you can do a rough estimation of the percentage of your loan portfolio that goes to the agri sector.
Thank you. So agribusiness is wide. We have various stages of agri. We have the very preliminary stages of the people doing the outgrowing, the farming, the aggregators, and then you have those who do the processing and all of that. So we have a huge portfolio where agribusiness in general is concerned. We are financing them, and then we are leading them towards considering energy transition, different ways of doing their business, climate change, because they are going to be highly impacted, So we walk them through a procedure, and generally we finance and support agribusiness. The outgrowers are the lower tier. We don't get direct financing coming. We don't even get direct requests coming from them, but they have associations, they have cooperatives that are able to qualify to come for financing. And indeed, yes, we support the agribusiness space. Yeah.
Thank you. I think that we can bring the Q&A session to an end. Unfortunately, we can't address all the questions that have been asked. For those who have their hands up, we would appreciate it if you put your questions in the Q&A chat box, and then we'll try and answer them subsequently and distribute it to the emails you registered with. I think that what we should have done was to set the session for longer than 2 hours, because there's a lot to be discussed when it comes to ESG, generally and specifically to ESG in the Ghanaian banking sector. So with that, I am going to give each of the panelists about, please stick to the 2 sentences this time to give us their closing remarks, and then we will switch over to Kwabena Situ, the host for the session, to also share a few words with us before we finally close. And once again, I am really sorry to the panelists who didn't get the chance to ask their questions. Next time we'll do a 2.5-hour session so that we make sure that all of these things are tackled. So we'll start with Pablo, then we'll go on to Stephen, and then we'll go on to Priscilla, and then we'll end with Francis. So Pablo, 2 sentences, your closing remarks.
All right, thank you, Anna. So let's see that this topic is a very, very important topic. It's on the top right now. Sustainability should be at the core of each business. So high standards of environmental and social management and a good strategy in ESG is a powerful way to manage concrete business risk, increase the markets through attract investment, and especially when we're talking about green financing. So I also, let's see that Ghana as a country affirms its positions in the sustainable banking network. So all these items supported by the also IFC platform for financial sectors are a key to achieve goals in the environmental objectives and the level of satisfaction of the legal compliance for the business. So thank you.
Thank you, Pablo, and thank you for joining us. Stephen.
Okay, thanks so much, Naya. Thank you. I think in the chat, there's two things I want to address as part of my closing remarks. One was the compliance. Yes, when you look at the statistics, the industry statistics as we have received, principle 1, of course, the compliance rates per our model is given as 45%. Principle 2, 55%. Principle 3, which is the good corporate governance, we are looking at 88%. And of course, that is because of the corporate governance directive that we had issued in 2018. That really underpins a high percentage of compliance rate for that particular principle. Principle 4, we are looking at 73.9, which is almost 74%. And then principle 4, which is the gender equality, we see 73. And then of course the financial inclusion 54. The principle 6 being the resource efficiency, we're getting 16%. And that for us is a concern. And I'm sure it could be that the clients that these banks are working with, most of them are not being the resource efficiency. Either they are not appreciating it, they are not using the solar energy here and there, water wastage things. So these are things I think when you are privy to the numbers, you begin to really work hard to ensure that, at the end of the day, clients really comply. And then principle 7, which is the reporting, we are looking at 39%. And that is on the low side because we do expect that institutions really report these things in their annual reports, right? And also report to the BOG. And it's important that we get the numbers up there. At the end of the day, it has some benefit to the institution. Sustainability, at the end of the day, it gives information to the public. And there is another area I want to address. So because of time, I couldn't give you the trend analysis, but at least I've given you as at September 2022 position. But the sanctions, then it was running through in the chat sanction as to whether BOG is going to sanction financial institutions. If you look at our way of doing things, our approach, or our approach over the years as we supervise and of course we regulate the financial institution, for every notice or directive, or let's say law or guidelines that we issue or principles, of course the purpose, the intent is to address maybe a particular risk that we have seen. So if you check the banking law, we check all the various directives of issue, we have to address risk. So for this principle we have issued in the area of environmental, social, and governance issues are also to address risks. And if the institutions themselves and all key stakeholders understand that these principles will ensure sustainability of their business, then of course the issue of sanctions even doesn't come in. Because you see that there's a business case for what you are doing. But of course, BOG stands to ensure that it gets really addressed, because at the end of the day, we are looking at the safety and soundness of the specific institutions and our jurisdiction, and then the stability of the system which will support the economy. Looking at it in line with our mandate as a central bank. I want to thank you so much, and I want to thank the panelists. I think it's been very interesting, and I think we stand to answer further questions as and when we come later on. But we do want to say that let this awareness and all this discussion started continue, so that together we really have a robust economy, a robust system, a robust financial system that will support our country. This is what we have. Thank you very much.
I can't hear you. I think you're muted.
Oh, sorry. I was saying that Stephen's 2 sentences turned out to be very long, and I was wondering whether I should limit it to 2 sentences as well. But let's hear your let's hear your closing remarks.
Okay, so we say sustainability is when we meet the needs of the present without compromising the ability of future generations to meet theirs. So for SG, we've gone beyond ESG, ESMS to consider energy transition, climate transition. Indeed, we didn't get to speak to Principle 6, but there's a surge in requests coming in the renewable energy space in the energy transition stage, because Ghana itself is transitioning its framework, given itself 2070, by which a lot of things will be different. SG is well positioned to support clients, change the way they do business. We need to start looking at it today. If we are not conscious of it today, there will be no business to manage in the first place tomorrow. SG is well positioned to support its clients. We see this webinar as very timely, very important, and we encourage more of this to, share information and draw on best practices. Thank you, now.
Thank you to Priscilla. Francis, two-ish sentences or 5-ish.
Okay, thank you, Nan. I think my co-panelists have said all the serious stuff. Have been very good summaries. So I'll end with the quotes, because I like quotes, especially from Seattle. And this is it. He says that whatever befalls the earth befalls the sun, the daughters of the earth is our mother. Whatever befalls the earth befalls the sons and daughters of the earth. If men spit on the ground, they spit upon the earth. And I think what this quote seeks to say is we all have to be responsible. We have a responsibility to ensure that we have sustainable businesses and the environment is sustainable, so that once we go, whoever takes over lives in an environment that is comfortable and that is livable. Thank you very much.
Thank you too. Kwabna, if you're available, we'll take our parting words from you.
Okay. Wow. It's been very insightful. Thank you so much, panel of experts. I'll call you professors in ESG, but the insight you've given today has been very, very good. So thank you so much. And I think we are going to comply. There needs to be continuous education. And I like what Priscilla said. ESG policies are organic, right, Priscilla? And then Francis, I like what you also said. In Stanbic Bank, we love the women more than the men. Okay.
What's the word she got?
Okay, all right. So thank you so much. And I think in Deloitte, we also offer a lot of solutions to clients. So just to show you what we can do. So James, can you just scroll down? Okay. So we can help clients in what we call the ESG consulting, strategy policies, and all that, updating your policies in the light of ESG and all that. And then we can also look at your ESG processes and systems to also enhance them for you. And that assessment can also be carried out for you, which we are doing for some couple of companies currently and some at the banks. And then we also have what we call the ESG audit readiness. So if there's going to be any external audit on you, you can come in, get ready for that audit, and then you are definitely or you will definitely pass. So you shouldn't worry at all. And then external ESG assurance. So you could be doing a lot of things around ESG, but you will need an assurance. You need an assurance. So we are there to give that assurance as Deloitte. Green bond assurance is something we do. It's a 720 reviews, either limited reviews or reasonable reviews are things that we also do. So who can you contact in Deloitte? Who can you contact? So quickly, we have Abna Baini. Abna Baini is our Chief Sustainability Officer in Deloitte, West Africa. The contact is there, in the email, the phone number. And then myself, I'm the assurance partner in Ghana. My email, my phone number is there. Roland Teng is a consulting partner. He deals with a lot of the policy issues. Opiawa is a risk advisory partner, also deals with a lot of the risk, ESG risk-related issues. And then obviously your able, what do I say to you now?
Moderator.
All right, thanks. So that is also there, and then you can get in touch. So thank you very much for your attention. It was good interacting, very insightful, and then we say God bless you. Thank you very much.
Okay, so thank you, everyone. And I apologize once again for having to take 15 minutes of your afternoon. We promise to do better next time. Thank you all. And then also we'll try and answer the questions that were put in the Q&A chat box and then circulate to the email addresses you registered with. Let's all go and have a great afternoon whilst we continue to make impact that matters. Thank you and goodbye. Oh dear, don't leave yet. I was supposed to remind you about the survey at the end of the session. So please make sure you scan the QR code and then provide feedback, because we really, really want to do better next time. Thank you all. Bye.
Thank you, Na. Bye-bye.
Thank you, Na. Bye.
Bye, Priscilla. Bye, Pablo.
Bye-bye now. We're well done. Well done.
Bye, Francis. Yes, we'll be talking on the side. Bye.
Yeah. Bye. It's gonna be good. It's gonna be good. Bye.
Look around. Everything depends on nature. The bees that pollinate the food we grow, the clean air and water that keep your workforce happy, healthy, and productive. and the precious metals within the technology connecting us, making every transaction possible. Businesses rely on nature for positive economic outcomes. Yet this same activity is putting the future of the planet and business profit at risk. It's time to add nature to your strategic agenda to expand the conversation from net zero to nature positive and restore nature loss. If businesses don't act soon, it could result in soaring commodity prices, job losses, resource shortages, increased regulatory pressure, and political instability. As a chair, you can unlock hidden value and drive transformation towards a nature-positive future. A future that holds great opportunities for organizations to mitigate risk and explore new product design, markets, and business models. And while businesses aren't expected to have all the answers, everyone is expected to have a plan, to take action. Will you lead your board with a culture of courage and commitment to nature? The time to act is now.
The financial world is transitioning toward more sustainable investment decisions. In addition to the financial performance of their investments, the new generation of investors cares about the social and environmental impact of their investment decisions. This change in mindset has a direct impact on our role as Deloitte professionals. Asset managers, banks, and other asset owners must integrate new criteria in their financial products as new European regulations insist on increased commitment and transparency. To support this change, Deloitte will increasingly focus on supporting clients in integrating ESG challenges in the processes, demonstrating related performance and managing related risks, and also supporting clients in better communicating in a reliable and transparent way. This means one must ensure adequate ESG strategies in place and that proper information flows are set up to capture data and report to investors. Our sustainability team can provide support at all stages of your ESG transition, from the setup of an ESG policy until the implementation or review of the due diligence processes, and also in the setup of a monitoring framework to track and measure non-financial performance. Financial products are also increasingly getting attention, such as listed green products. Green bonds, green funds, and other listed sustainable instruments must comply with the specific requirements to be eligible for listing on the stock exchange. Responsible finance is not just a trend, it is the future. We are prepared to support you in that journey.